Traders, I'm thrilled to be presenting some fresh ideas, concepts, and strategies with you all today. And these ideas hold the potential to make some significant directional moves this week. Now, rest assured, as always, I'm going to be providing my precise and actionable trade plans and outlining my exact entry and exit strategies. But just before I do this, I wanted to offer a very brief insight into how I manage risks and how I prevent a massive outlier move from potentially causing a career ending loss. Now, based on their historical success and data, I have a risk table that systematically tells me what percent of my daily loss I should be risking on a particular setup. And this is something that I've developed over time, obviously, as I've collected data and stats, and something that I've built into this rule that I strictly enforce is something that pertains to my A graded setups. So A minus, A plus, A plus plus setups. And that is that I'll only lose up to 3 days worth of an average green day in any particular trade or idea. Now, what I do is I factor that amount into my risk table. And of course, it fluctuates depending on recent market activity and the market environment that we're in. It's almost a trailing average green day in that sense. And it keeps me safe knowing that it's never going to be a blow up if I trade poorly or if I'm simply wrong in that idea and the trade doesn't work. And at most, it's just going to be a few average green days worth of losses, 3 green days worth of losses. So that is just something that I enforce into my trading to avoid a potentially career-ending loss. All right, now on to new ideas for the week. And kicking it off with another breakout idea because those have been performing extremely well in this market. So I'm going to continue to focus some attention there each week until something changes. And that is the breakout that is setting up in Tesla. Now, typically, when an idea seems as crowded as the idea in Tesla and this breakout idea in Tesla, I'll usually avoid it. But given how the stock has shrugged off, a recent short call on Friday last week and firmly held up in the higher end of its range following the Cybertruck event, I'm interested in it. And I love how the stock has had several opportunities to sell off in the past few weeks, but it's failed to do so, and it's now consolidating above increasingly tightening moving averages right here. So basically, I'm keeping it very simple with Tesla. I want to get long, and that is above the hourly consolidation. That's around 247.50. If we can take out last week's resistance and we can hold above that, and if that we hold above that with authority, then obviously I'm looking for momentum higher. So initially my stop after my entry at 247.50 will be 245 because I don't want the stock trading back within last week's range once we get above it. Now, if the stock breaks above the resistance at 250 and holds with authority, I'm going to look to double up my position. And at that point, my first target for this position, for this trade, is going to be 260. And I'm going to look to trail my stop using higher lows on the hourly time frame, something that I like to do when it comes to swing trading. Now, once the stock breaks out successfully, my time frame for this position is going to be 2 to 3 days. Now, the next idea I have for this week is Affirm. Now, Affirm is obviously, that was previously a long idea, probably one of my best ideas recently that I've had, catching this breakout over 26s. And since breaking out from 26, the stock's surged almost 63%. Now, it's also important to remember something that's obviously contributed to that surge has been its significant short interest, which is over 20% at the moment. Now, simply put, with Affirm, what am I looking for? I'm looking for a 2-day pullback short swing opportunity. But in order to get short, I need to see the stock exhaust to the upside. So I'm looking for a sign to enter short and a sign that tells me momentum is shifting. All right. And then obviously I need a level to risk against because I can't just get short and hope for the best. I need confirmation and I need to predefine my risk. So for example, I'm looking for the stock to experience a range expansion to the upside. All right. I'm looking for it to get stretched to the upside intraday and then have an engulfing red candle, a huge failure, an exhaust move, and that would indicate to me that a top is formed in the short term. Some swing shorts have been exhausted, some longs have chased. There's quite a lot of supply and overhead right as of that moment, and a good level to risk against. And so that would be one thing I'm looking for. Alternatively, I'm looking for a break of a multi-day consolidation. If we consolidate between 41 and 43 or 42 and 43, for example, for multiple days, the range contracts and we break lower, that could be a potential entry. Or breaking the uptrend by putting in consecutive lower highs and lower lows, for example. So, I'm beginning to think about what specific setup and what confirmation would look like. And once that occurs, I'll look to get short versus the high of that day, and I'll look to trail my position using the hourly time frame once again, lower highs. Currently, I have 3 targets. First target would be 38, a move back into 38. Then I'd be looking for a move into 36. And if that target is reached, which is a lofty target at 36, then I'd look to trail one third left in my position. And that would be for 34, or get stopped out on the most recent lower high on the hourly time frame. Now, the last idea is and it relates to a number of movers from last week. This basically is for a backside short, similar to what I discussed last week in a number of last week's small cap and low priced movers. In 5 stocks that I have alerts set for in case they pop into some failed levels from last week would be INTS, SVFD, MLGO, GDHD, and WBUY. Now, I'll give you my plan for first one, which is really can be extended to all of them if they have pops higher into potential levels of overhead and where I think that they could fail from intraday. So INTS, what is my plan here? My plan here would be to look for the stock to have a push into a previous level. I would like it to have a push into 950 area, this zone right here where we failed from Friday with volume. I think there could be substantial supply and overhead coming into this level. So if we get a push into that level intraday, reactively, I'd look to get short based on the price action with a stop above that move's high. So once we push into this zone right here, if we have a quick push up into 950s, we get a fail. I'd look to react to that price action, get short versus the high of that move. And my target on this position would be a move back to Friday's low. And obviously, once that position works, how am I going to manage my risk? I'm going to look to trail my stop by the most recent lower high intraday using the hourly time frame once again. It can be shorter, looking at around a 15 to 30 minute time frame, but if we get a pop early in the morning and I'm going to look to hold this intraday, realistically towards the close, I'll look to use the hourly time frame once the position starts to work in my favor. And those are my 3 main stocks and ideas for the week as it relates to swing trading, guys. And wishing you all the best for the week. Good luck, and I will see you next week. Cheers.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.